Hello, I'm Adrian Finnegan. This is Counting the Cost on Al Jazeera, your weekly look at the world of business and economics. This week, as campaigners demand the world does more to tackle climate change, we delve into the multi-billion-dollar carbon trading market. Is it fit for purpose? Are other biggest polluters being given a free pass? Big data and algorithms that discriminate. We find out why women and people of color continue to get a raw deal from Silicon Valley. Plus, President Putin, shunned by the West, completes his pivot to the East. Scientists already suggest that the planet may have crossed a series of tipping points that mean global warming is unstoppable. The European Union has declared a climate emergency, urging nations to cut greenhouse gas emissions to zero by 2050. The question is how? One method is carbon trading. We've all come across some form of taxes or extra charges for using plastic bags, coffee cups, and of course, the optional carbon footprint charges when you buy a flight. But this is a much larger market for even larger polluters, and it's a growing market. The value of traded global markets for carbon dioxide allowances soared 250% last year to a record high of 144 billion euros, according to Refinitiv. There are 45 national and 25 subnational markets. With governments trying to set a price for a ton of carbon, companies can buy certificates to offset their emissions. To avoid penalties, companies can buy the emission credits of others. Tesla, for example, has sold emission credits to Fiat Chrysler and General Motors, making $1.7 billion since 2012. So how successful carbon trading becomes really depends upon China, the world's biggest polluter. While it's been the biggest investor in renewable energy, it's stepped up spending on coal-powered plants at home and abroad and has yet to launch its own carbon trading market. Beijing would like richer nations to do and spend more than poorer nations for past emissions. And it looks like Europe will push for a new Green Deal that could see the European Investment Bank spending $1 trillion on shifting the economy to cleaner forms of energy. The United Nations believes that we need to spend $48 trillion by 2050 in order to save the planet. Joining us now from London, Anthony Hobley. Anthony is the co-chair of the Carbon Tracker Advisory Board and the newly appointed executive director of the Mission Possible platform. Good to have you with us, Anthony. Is the trading of carbon emissions working?
Well, good morning from a very chilly London. Yes, I believe it is, although it's been a rocky road to get here. You know, we've had a few stops and starts. So we started in Europe with a European-wide emissions trading market well over a decade ago, and it was going very well. We had very strong prices that were driving emissions down across a whole range of sectors. But what hadn't been anticipated was what would happen in a global financial crisis. So emissions collapsed in Europe, and there was no mechanism in that system to deal with that. Imagine if we'd gone into the global financial crisis having set interest rates or money supply for 8 years, but we did that for carbon prices and carbon caps. And it took quite a long time to change the structure and put in place a mechanism to bring out the excess supply that was created by the global financial crisis. That's now done, and prices have recovered quite well to around 25 euros. And again, that market is driving down emissions. And we're also seeing markets emerge around the world, for example, in China and sub-regional schemes in California. So I think it is working, but there's still a long way to go to get this absolutely right.
But governments and regulators are still giving permits to polluters, aren't they? That's a problem, isn't it?
Well, when any change, you need transition measures. And I think what has happened is when we're imposing a carbon price for a trading mechanism, we started with free allocation, but we're transitioning away from that. So, for example, again, in the European scheme, 57% of the allowances are now auctioned. You have to buy them. For the power sector, 100% have to be bought. For some of the sectors that are considered to be exposed to international competition from their competitors that don't have a carbon price, they get a certain amount of free allocation, but they have to prove that they're exposed to that international competition. It's why some politicians are now talking about border adjustments for products coming in, having to pay some kind of levy related to the carbon impact.
Okay. Despite the fact that there are penalties, how do you answer the critics who say that this permit system does nothing but give emitters a clear conscience that they can continue to pump out greenhouse gases?
Well, carbon market schemes tend to operate within a closed system, within a bubble. So you set a cap for your economy, and the carbon market is just one of the policy tools that you're using to drive down emissions. It usually sits alongside other policy tools like product standards, regulations around energy efficiency, and so forth. So it's not the emission, the value is created in the permits by the fact that emissions are fixed and they have to be reduced somewhere. The system doesn't work if you're not within that closed loop, and it doesn't work if emissions are not being driven down and there's not a cap on that sector or on that part of the economy. But I think it is critical as we go forward that everybody accepts that carbon pricing is just one of the tools on a pathway to net zero emissions. So the whole thing has to be part of an overall approach. I think also, if we had started carbon markets at the right levels 20 years ago, we could have probably left a lot of the work to that carbon price. It's too late. We have too short a period of time now over which we have to reduce emissions. So it's going to have to sit alongside a range of other policy measures to get us to where we need to be.
Poorer nations, Anthony, would like richer nations to pay more for past emissions, and the UN is in favour of that, but that's a bit of a sticking point, isn't it?
It always has. There's always been an argument between the developed and the developing world. I mean, it's based on an argument of equity that the developed world has been emitting, particularly countries like the UK and the United States, for a century now, and they've built their development on that century of emissions. So we've used up quite a lot of the carbon budget, and so understandably, the developing world is saying, well, we should have that opportunity as well. The problem is we're all in the same lifeboat, and we're all going to be impacted. And actually, many of those in poorer parts of the world are going to be in those developing countries are going to be impacted first and harder, and they have less resources to deal with those impacts. So I think they're increasingly realizing we all need to take action. I think the good news is, in many cases, the new clean technologies can allow those countries to leapfrog what we have used in the UK, much as many developing countries have leapfrogged fixed line telecom systems and gone straight to mobile systems. In terms of energy generation, it is now possible to leapfrog coal-fired power stations and go straight to renewables and clean energy sources that are now just as good, and they've scaled up and they're cost competitive with things like coal. And what we need to do is look at that in other sectors as well, the other hard to abate industrial sectors.
Anthony, it's been really good to talk to you on Counting the Cost. Many thanks indeed for being with us.
You too. Thank you very much.
Well, as we reported earlier, the European Union is taking the lead in pushing for a new Green Deal. And the new head of the European Central Bank, Christine Lagarde, wants the bank to take into consideration climate change when it's making monetary policy decisions. I caught up with Alberto Solli from the Frankfurt Financial Centre when he was here in Doha and asked him how this green monetary policy might work.
When you have been at the IMF and World Bank meeting in Washington a couple of weeks ago, there was a clear sense that something ought to be done. And the ECB is acknowledging that they want to support those green policies. I would see not what some have been asking, less risk weighting for green assets. I don't think that's going to happen. But what we eventually will see is a push towards more risk weight of assets that eventually will have negative impacts on the environment.
And do you think that this is something that the financial sector, the ECB, the IMF, the World Bank, that they should actually be involved in? Is it their responsibility to push this, to lead from the front?
The answer is clearly yes, because we're talking about a critical situation. If they don't lead now, when would be the time to lead?
And how do they lead then?
Well, they would lead by putting the limits of how you act as a financial services company in a way that these will have strong incentives to look at what their clients doing and helping their clients progress all the way to become more sustainable. It's not the way that you would sort of cut off everybody else from credit that is not immediately sustainable. It would be more a constructive approach that they accompany those clients and takes them through the process to become more sustainable. That's what we all need to do.
If that's the case, to what extent are you playing catch up here? That it's almost too late. This should have been happening. Someone should have had the foresight to have been doing this long ago.
Well, with hindsight, you always know more. I had the privilege at university to hear two academics, which at that time already had the foresight. And you've had a lot of discussions, but like always in politics, the time is only ripe when the crisis is near. So politicians need a certain sense of urgency before they move.
There's been a lot of criticism, particularly from Germany, about the ECB's monetary policy, the huge stimulus. Are things going to change, do you think, with Christine Lagarde now in charge, now at the helm?
I think there is criticism both for substance and style. Let me probably start with the style. And here Christine Lagarde already addressed that very clearly, is that she said she wants a more colloquial style. She wants more change. She wants to more open discussion. That's what we haven't seen in the past, and I think that was part of the issue. And when it comes to monetary policy itself, there is always an argument in the Council whether or whether not to expand. I think clearly that negative interest rates have reached a point where you have to discuss whether the benefits or the trade-offs are really justifying additional easing. And the latest who spoke out was the central bank governor from the Bank of Italy, where you would probably least expect it. So negative interest rates have run their course. But of course, the central bank has more ammunition.
It's been really good to talk to you on Counting the Cost. Thanks for coming here to see us.
Been a pleasure.
Now, every time you use your phone, computer, an app or a website, you're leaving a digital footprint that tells a story about you, and that can be used to sell services back to you. Now, when you watch films or listen to music, the data can be used by algorithms to make helpful suggestions for other material that you may want to watch. But it can also give away your sex, your age, and your race. Now, it's that manipulation of data that's starting to raise concerns because it can be used to discriminate against women and people of colour, for example. Tech entrepreneur David Hansen claimed that Apple's new credit card gave him 20 times the credit limit than his wife. Apple co-founder Steve Wozniak tweeted that he had a similar experience with the card operated by Goldman Sachs. A Wall Street regulator launched a probe into possible discrimination. The New York Department of Financial Services also opened an investigation into healthcare provider United Health Group after an algorithm allegedly favoured white patients over black. The so-called information economy is becoming a huge issue for the European Union. Germany's Chancellor Angela Merkel has urged Europe to seize control of its own data from the likes of Amazon, Microsoft and Google. There are so many issues for us to discuss here. Let's bring in our guest. Joining us from London is Frederico Kelvin, who's a Mozilla Tech Policy Fellow. Good to have you with us on Counting the Cost, Frederico. How widespread is discrimination, particularly against women? And is this partly down to the fact that the coding industry is so male-dominated?
Thanks for having me. I think a lack of diversity is a real problem in the tech industry, and not just in the tech industry. If the workforce was more diverse, especially in management and in engineering, the outrageous scandals that we're seeing now would be picked up much earlier, and we also would see very, very different products. But I also think it's important to say that diversity alone, that's not the only problem that the tech industry has. There's a general lack of accountability And the sort of automation and automated discrimination that we're seeing just amplifies this existing problem, which is a lack of accountability.
You talk about that discrimination, that automatic discrimination. There have been problems with facial recognition, for example, haven't they? Tell us about that.
Sure. So studies have shown that some of the most widely available commercial forms of facial recognition have very different levels of accuracy for people, for basically anybody who's not male and white. And that's a serious problem because on the one hand, you could say it's great that a system doesn't recognize me, but it also means that there's a higher chance of you being misclassified, of misidentified. I always like to say such technology is Orwellian when it works and it's Kafkaesque when it isn't. So you could be flagged as something you're not, and the onus is always on you to then prove that the system is wrong.
Amazon's algorithm is reported to have screened out all of the women in a recruitment process. Facebook reported to have determined that people were gay if they liked certain posts. Are there any checks and balances in place to catch issues like this?
It's incredibly difficult, and I think it's important that the cases that we talk about on the news, those are only the tip of the iceberg. Most algorithmic harm is incredibly invisible. So a good example would be you're applying for a job that you really wanted to have and you get rejected, but you will never know whether there were simply more qualified candidates or whether there was an automated system that analyzed your video call and flagged you as someone who's deceptive or simply has the wrong personality. The problem is always you often don't know that the systems are being used at all. You don't know whether you have been discriminated against, and if you have, there's hardly ever a way to correct wrong decisions.
And if the original data set, I suppose, has a bias, then the algorithms will think that's the norm. In other words, it's the humans, it's the programmers that are the problems, and not the technology itself.
There are many different sources of discrimination. The data is one. Discrimination can also be hard-coded, so there are different sources. And I'm also glad that you mentioned humans. Humans are terrible in so many ways. There's institutional discrimination in hiring, in the justice system. So what we're seeing is not something that's entirely new, but what is new is the quality. So automated systems can discriminate at scale, and they can discriminate in a way that's very invisible and very hard to tackle and challenge.
How do we fix this then, Frederica?
I think we need to start with the tech industry more broadly. As I said, it's lacking accountability. We tend to treat the sector as something that's fundamentally different from everything else. We don't expect tobacco companies to self-regulate. We don't accept ethics guidelines to guide the oil industry. And yet, when it comes to tech, we tend to agree on these very fluffy standards. So that's a general problem. Secondly, I think in all areas where it really matters, so where the effects are significant, people need to be able to challenge decisions that have been made about them. People need to be able to find out whether they have been discriminated against, and if they have, they need to be able to get justice.
And one final question on data. Should Europeans be concerned that their data is being held by Silicon Valley giants? More nations now are insisting that data is stored locally. Where are the regional champions in all of this?
I think Europeans and people everywhere should be concerned that they have completely lost control over the data and that it's so incredibly hard to find out where your data even is. The idea that you mentioned is the idea of data localization is also incredibly problematic. Many governments around the world are demanding companies to store data locally because they want to have more access to it for censorship, for surveillance. So this is not without problems. I think storing data locally will not solve the problem. What we need is people need to have rights over their data. People need to have full control over who processes their data. At the Internet Governance Forum last week, Chancellor Angela Merkel said something really interesting about digital sovereignty. She said it's not about protectionism, it's not about fragmenting the internet, it's about making sure that people and society can self-determine the technological future we want. And I think that captures it really well. So it's up to us to decide what tech do we want, what are the rules that should govern the use of tech.
Frederica, it's been really good to talk to you on Counting the Cost. Many thanks indeed for being with us.
Thank you.
China and Russia have opened a $55 billion gas pipeline that connects Siberian gas fields to China's northern border. By 2025, the pipeline will carry the equivalent of Brazil's annual gas consumption and will net Russia $400 billion over 30 years. But the move goes beyond just economics. This is Russia's pivot to the east. Al Jazeera's Andrew Thomas reports now from northern China.
Life is tough along China's border with Siberia. It's minus 12 degrees Celsius. There's not much industry, not many jobs. Most around here use coal to cook and heat their homes.
Burning coal is obviously very dirty. It's polluting and also a lot of physical work.
But two big infrastructure projects are bringing change. First is this bridge. Opening next year, it crosses the Amur River. Frozen at the moment, the river divides Russia and China. The bridge will link the cities of Blagoveshchensk and Heihe.
I'm working on the construction of the bridge. I feel proud when I tell friends I'm one of the contributors.
But it's the second project that is the more significant.
This is one of the most remote parts of China. And just a kilometre or two over there is one of the most remote parts of Russia. And now, linking the two is this pipeline. It's an economic project, of course, but it's all about politics too.
The Power of Siberia pipeline is about to deliver gas from Russia to cities across China. It's cost $55 billion and on the Russian side stretches more than 3,000 kilometres. The pipeline through China will eventually reach Shanghai, almost 3,000 kilometres to the south. For China, it means well-priced energy that's relatively clean.
Other than for heating, natural gas can be used to generate power. It's much better than oil and coal. It has much less pollution and fewer emissions of CO2.
For Russia, the project is unlikely to make much money. As the only feasible customer for gas from Russia's eastern fields, China bargained hard. Russia was keen because it is facing resistance to its plans to export more gas to Europe. Some European countries and the United States have tried to block development of a new pipeline to Germany. They think it will leave Europe too dependent on Russian gas. So Russia wants to shore up its strategic ally to the east. For China too, more Russian gas means less reliance on liquefied natural gas shipments from the United States and Middle Eastern countries potentially influenced by US policy. The pipeline, then, is a strategic link as much as one about money. Andrew Thomas, Al Jazeera, Heihe in northern China.
The Brazilian and Argentine steel and aluminium industries were the latest targets of United States tariffs after President Trump accused both nations of artificially devaluing their currencies. Al Jazeera's Teresa Bo reports now from Buenos Aires.
In Brazil, which is slowly recovering from a recession, the news came as a shock, and the steel industry, which accounts for more than $2 billion in exports to the US, talked about retaliation. President Jair Bolsonaro, Trump's main ally in South America, believes the situation can be worked out.
If necessary, I'll talk to Trump about that, but we're not backing off.
Meanwhile, in Argentina, with its struggling economy, the announcement did not go unnoticed. New tariffs on steel and aluminum only adds up to the uncertainty that already exists in this country. In 1 week, Argentina will have a new president, Alberto Fernandez, and he will have to deal with double-digit inflation rates, currency controls, and the possibility of a default on the sovereign debt. Argentina's government has been battling devaluation for months as people are turning to the US dollar to protect their savings. Argentina's central bank has spent more than $5 billion to bolster the peso since the primary elections in August, which triggered a collapse in the value of the currency. Trump now says the devaluations were intentional. For many, the latest US measures is also a consequence of the increasing commercial activities between China, Brazil, and Argentina in the middle of a trade war.
These are some of the unforeseen consequences of US policy. Investors have been moving from emerging markets to the United States and to developed economies. And that, in Argentina, it's one of the reasons behind the country's currency crisis in 2018, major devaluation, and which of course has made its primary exports more competitive. So in some ways, the Trump administration is now reacting to something it helped create.
Competitive exports, which in part are heading to China. Argentina's President Mauricio Macri and Jair Bolsonaro have experienced a warm relation with Donald Trump since taking office. But for many, dealing with China these days is enough to put the best of friends at odds.
And that's our show for this week. If you'd like to comment on anything that you've seen, you can tweet me. I'm at @afinnegan on Twitter. Please use the hashtag AJCTC when you do, or you can drop us a line. Counting the cost at aljazeera.net is our email address. As always, there's plenty more for you online at aljazeera.com/CTC. That takes you straight to our page, and there you'll find individual reports, links, even entire episodes for you to catch up on. But that's it for this edition of Counting the Cost. I'm Adrian Finnegan from the whole team here in Doha. Thanks for being with us. The news on Al Jazeera is next.